Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra and with me today is Sonia Shenoy. Sonia, good afternoon. You know, when we saw that inflation number last night, who would have thought that India will not follow suit and they'll be like, we are in our own world, we are going to recover from lows. And what a massive recovery we have seen. Nifty is up 270 points from the lows, Bank Nifty in the green with gains of 530 points. Like we would have never imagined, it's an 1100 point recovery from the lows. And across the board, we are seeing decent buying, if not, you know, the massive sell-off that we saw across the globe.
Absolutely. I guess for some people, this would not have come as a huge surprise, right? Because India has been so resilient this year that this was perhaps par for the course. But I take your point. I mean, the sheer ferocity of the recovery is something that perhaps the market could not digest. For now, it's very good for the bulls. And if you remember, for the full year, markets like the S&P 500, the Dow are still down about 12-14%, while India is standing tall with a gain of about 3-odd%. So good going there for the Indian markets. Let's take you through all the top headlines. The market recovers sharply after tumbling in early trade. The Nifty reclaims 18,000 led by financials.
Cement stocks surge in hopes of consolidation in the industry. Sector heavyweights informs exchanges it will consider raising funds at its board meet on Friday. This move sparks speculation over its end use.
Aegis Logistics, Mahindra Logistics and all cargo get a fillip as the National Logistics Policy 2022 is set to be released soon. The policy aims to lower logistics costs to global standards and expects to help India rank amongst the top 25 nations on logistics performance.
All right, those are the top headlines that we are tracking on Midcap Radar at this point in time. A massive recovery, but of course the big news overnight was a red-hot US inflation, and it sent the global market stumbling as investors braced for more aggressive policy action from the US Federal Reserve at its meeting next week. To discuss the global market outlook and also an interesting report which came in from Jefferies, we are joined by Simon Powell, who's the global head of thematic research at Jefferies, joining us now. Simon, good afternoon. Thanks a lot for joining us. Well, you know, that's the big word, inflation. And considering what you recently wrote about Gen Z and the focus being on emerging markets, what do you think? What is this big inflation figure? What would it do to emerging markets, the economies, and the markets in general?
Well, thanks for having me on. So we look at demographics. We think demographics is a really important mega trend for investors to focus on. And when I look out long term, I see this as just a temporary inflation scare because demographically, we're going to see populations shrink. We're going to see population shrinkage in China, in Japan, it's already started. And so the long-term outlook is inherently deflationary. We have this short-term inflation scare, and the question then becomes, how long does this run for? On the question of Gen Z, the report we've just published, Generation Z is an important cohort of people that investors should be looking at.
All right. So Gen Z offers great potential. I guess, you know, that is the purchasing power that we're looking at in the Indian markets as well, right? Ever since the pandemic, the number of young investors that have entered the market has risen multifold. And that perhaps speaks about why not only have the markets risen, but consumption has picked up in a big way, right, in all of the consumer stocks. Is that the way to approach the market now here in India, Simon? If yes, what are the themes that you're looking at?
So yes, definitely. Gen Z, Indian Gen Z is the biggest single cohort of Gen Z around the world. They are fiscally more responsible than their predecessors. We see that. So that's negative, I think, for the Bitcoin story and crypto, but is positive for housing development. It's positive for autos, it's positive for consumer consumption. What also came through strongly in a survey we did, it's also positive for luxury and premiumization. So investors should be looking at the consumer sector, looking for premium products, premiumizations, higher margins, etc. One also interesting tidbit, Gen Z told us that they're the loneliest cohort ever, which kind of makes sense because families have been shrinking in terms of family size. And there's a strong read through for pet ownership. They want to own pets.
Okay. So in that case, premiumization is a theme that, you know, Gen Z could actually give a fillip to. But does that also mean there are certain sectors or certain consumption patterns which will not see the growth that earlier or the millennial generation saw? See something like buying homes or buying cars for that matter. Do you think those are the sectors where you'll not see a lot of consumption?
On the autos, the jury's out, because the question is, does Gen Z want to own cars and drive cars? And we see shrinkage in driver license numbers globally, and we probably will see the same thing from an India point of view. But as I said, fiscally responsible, so we're going to see them invest more money than the previous cohort did, and potentially invest more in property. So I think on the negative side, student loans, we're going to see a reduction in student loans globally. Gen Z is less inclined to take out student loans for education, less inclined to take out payday loans and short-term finance that might be squeezed. So those are the things that could be negatively impacted.
Okay, I like the way you said, Simon, that Gen Z is only interested in having pets. No one wants to have kids anymore. As they say, right, pets are the new kids and plants are the new pets. So I guess you've got to live with that. But how does one capitalize on this move, especially in a market like India? Because there's so much disruption happening every day, right? Whether you talk about fintech, you talk about electric vehicles, there's renewable energy. And the new generation, which is 25% of the population, as you said, the spending population, is interested in these new themes. So what would you pick from a long-term investor standpoint?
Look, long-term, I think tech is still somewhere to be, because remember, this is a generation that has grown up with Google. I mean, Google came to existence around 97 when this generation started being born. So they are absolutely connected full-time. So tech, I think, should still have a big focus. I think also people should really think about the inherited wealth that this generation is going to acquire. And it depends on what government does with inheritance taxes and so on. But we're going to see probably the biggest ever transfer of wealth from the boomers to the Gen Zs, and it might skip the millennials. And that's going to be significant. Their earning power is going to go up. So a large cohort of people standing to inherit a lot of money, good spending power. I'd be focused on luxury, because they tell us that they do want to buy luxury goods. So I think the read-through for luxury is high. They want quality, and they're fiscally responsible. So investors need to factor those three things in.
So how would you play the emerging market theme in that case? If we talk about other emerging markets, is there anything other than India that you would like, and generally specific themes that you would look at?
Yeah, look, so as we said in our report, almost 90% of Gen Z is in emerging or frontier markets. So obviously India, China, but then you should look at Indonesia, you should look at Mexico, you should look at some of the LATAM stories to see those big populations of Gen Z. Because what you're looking for is low, medium age across that population. In terms of those themes, the ones I described, so look at tech, look at consumer, but premium consumer. And look for some degree of national identity. So we've seen this strongly in China. Chinese Gen Z consumers switching to consume Chinese products. So there's some nationalism in there as well. What I would say is a rotation out of China and into India, which has clearly worked over the last year, should continue to work, because demographically, India is in a much better place than China.
So what do you do, Simon, with some of the old economy stocks and sectors, right? Whether it's the traditional banks that are getting disrupted by fintech companies, whether it's the traditional ICE engine automakers that have been doing well for a very long time, but now getting hit by electric vehicles. Do you move them out of your portfolio, or do you, keep the faith there?
I don't think you move them out of your portfolio altogether, but you recognize that these companies are going to have to live with a lower top line and therefore bottom line growth number. So you ask the question, is that lower growth outlook in the price already? If it is, then you can continue to hold. But if it's not in the price, then potentially you trim your exposure. You raise an interesting point about, developed markets. The outlook demographically for places like Italy, places like Germany, and is not great. And so investors need to be factoring in lower top line growth across all sectors as a result of the demographic outlook.
Okay, but India in that case tends to benefit according to you. Okay, so
absolutely, yes, right spot.
So in that case, that is a longer term scenario, right? That shift that we are talking about, consumption patterns. In the medium term, what is the outlook on emerging markets, considering whatever is happening? You said inflation is also going to be a transitory thing. So in the longer term, do you think deflation could be an issue?
Look, deflation is going to become an issue for China if you think about it from an emerging markets point of view. China's got a real problem. It's going to, if we look forward, it's going to behave very much like Japan from a deflation point of view. But that's a long-term story. In the short term, in the short to medium term, from an emerging markets point of view, I would think that inflation in emerging markets potentially might not be as high as we've seen in developed markets. And I think that's probably reflected in what the Indian market's doing at the moment. So it's going to be imported inflation probably from the energy crisis and probably some imported food inflation. But I don't think there's a major issue. I do see India as a bright spot demographically. And that's the key takeaway.
All right. Well, India is a bright spot. That's on that optimistic note, Simon, we'll end this conversation. Thanks a lot for joining in and giving us your view. That's the word coming in from Simon Powell of Jefferies. They say that there's a big opportunity because of the Gen Z population that is now, more focused on premium products, more focused on technology. So those are spaces perhaps you need to look at. Let's slip into a short break. Up next, we'll be joined by the co-founder and managing director of Rossari Biotech, Sunil Chari, to discuss the company's business outlook. Stay tuned.
Hi, welcome back. You're still tuned into Midcap Radar on CNBC TV 18. Well, specialty chemicals company are in focus. In general, they have been doing well. And the energy crisis in Europe has taken the front seat as far as discussions around chemical companies and demand outlook is concerned. Let's discuss this with one of the companies. Sunil Chari, the co-founder and managing director of Rossari Biotech, is joining us now. Mr. Chari, good afternoon. Thanks a lot for joining us here on CNBC TV 18. Well, in Q1 as well, we did speak about and mention the fact that demand for textile industry was lower due to the crisis that we are seeing with respect to energy in Europe. Now that crisis is actually worsened. In that scenario, what is the outlook for this particular segment? And do you think some pressure on margins will continue for textile segment?
We see a slowdown in the textile segment, but we have different divisions. The surfactant business is seeing healthy inquiries from Europe because of the energy crisis there.
So when you say slowdown in the textile segment, for your own business, what could the impact be? You said surfactants are doing well, but overall, because of, the energy crisis in Europe, what could the hit be on your own business, say, over the next 1 year?
We don't see a very big hit because our exports directly to Europe is not very big. We have some exports of phenoxyethanol and some personal care actives to the European market, but that we don't see a very, very big hit. But we see opportunity in this crisis for one of our subsidiaries called Unitop Chemicals, where we have surfactant exports. So overall, on consolidated basis, we don't see a very big impact of the European energy crisis on us.
Just generally, Mr. Chari, I wanted to understand what's happening in Europe because, ammonia production there has been impacted, capacity shut by 50%. That's one of the energy-intensive chemicals. For a company like yourself, do you think because of the shutdowns there is a bigger opportunity? You said for Unitop. How big of an opportunity do you think it is? Which are the products where you can actually compete with European manufacturers?
So we produce ethoxylates and propoxylates. These are basic building blocks for any industry. And this production would be impacted in Europe also. So that is where we see the opportunity for Rossari in the coming few months.
So earlier you had guided for revenues of 2,000 crores by the end of FY23. Would you stick to that guidance?
Yes, we stick to that guidance of 2,000 crores and 250 crores of EBITDA.
And on the margin front, about 14 to 15% was your expectation. Is that something that you would hold on to?
250 crores, yeah. So we had given 250 crores of EBITDA and we are very hopeful of achieving that figure for this year. Our focus remains on EBITDA as amount rather than EBITDA as a percentage, which we have been, conveying to all our investors for the last few calls.
Okay. So what about raw material availability for Unitop itself? There was some supply constraints as far as raw material ethylene oxide is concerned. And generally, how are the pricing right now for acetic acid, your other raw materials? Are you seeing some pressure there, and are you able to pass it on to your customers?
So prices are falling now. I think we have reached the bottom in both acrylic and acetic acid, and we feel that the prices will be steady for the next couple of months. For us as Unitop, the ethylene oxide availability is very good now, so we don't see any problems in supply chain and raw materials for Rossari and subsidiaries.
Any further price hikes that you plan to take?
No, because our raw material prices are steady. We don't plan to have any price.
Okay, so no further price hikes. You have some cash on your books as well to the tune of around 70 crores. Will you be investing it back into the business? Any plans to give it back to shareholders?
We had second tranche payment for our subsidiaries acquisition. So we paid, around 95 crore rupees for the second tranche of payment. So we used up the cash we had on the balance sheet.
Okay. I also wanted to speak to you about your addition that you're expecting more modules at your Dahej facility. What is the plan here? Will you be investing more money? And generally, what are your expansion plans? So far, growth has come in from inorganic ways as well. Where will it come in from here on? Will it be via value-added products, or you'll just build on to the inorganic growth that you've been seeing?
No, we had planning a healthy mix of organic and inorganic for the future. For the time being, we have, capacity utilization of 50 to 60%, and we want to ramp up the capacity utilization in the coming quarters. The Dahej plant, we will ramp up production of more surfactants, more polyester resins, and of course, increase in production of acrylic polymers there.
Okay, all right, Mr. Chari. It was a pleasure speaking with you. Thank you so much for joining us and making sense of what's happening with the company and what's happening in Europe as well. Not positive for all the chemical companies, but some of them have an opportunity in a couple of their products as well. With that, we'll slip into a short break now. We'll come back with more, but before that, there's a quick reminder for our viewers. It's that time of the year again. Money Control Pro's financial freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab the benefits now only on Money Control app or website.
Welcome back. While the headline index has recovered almost all of its losses today, in the broader markets, there's lots happening. Fortis Healthcare is up almost 7% right now. You have something like an Indices Bank that's up almost about 5% odd. Delivery has come back into action, up almost about 3.5%. And metals are also looking quite good this afternoon. So something like a JSPL is marching ahead. But on our mid-cap spotlight segment, Vivek will focus on select holding companies, their performance so far this year, and why these companies are rallying today. Vivek, over to you.
Well, that's right. So what's actually happened as far as the broader end of the markets is concerned is the fact that, the broader end of the markets have significantly outperformed in the near term. And this has actually led to, HNI investors who typically look for value picks struggling to find value as far as the broader end of the markets are concerned. In such a scenario, the holding companies, stocks or companies that typically have holdings in larger listed entities, and, the holding companies, when you look at it, the main purpose of the holding company is to have holdings as far as larger listed entities are concerned for the promoter, and which is where the stake is actually controlled. So today and in the last couple of trading sessions, we've actually seen a lot of liquidity coming in as far as the holding names are concerned, and significant moves being seen here. So if you're looking like a Bajaj holding an investment, the Bajaj Group holding company, this particular stock has risen almost 26% just in this particular month. We're talking about Pilani Investments, part of the Birla Group. We're talking about a move of almost 14% seen this particular month. The Tata Investment Corp, that has stakes in significant Tata Group companies, companies, again, moving almost 56%. It's been a significant outperformer even within the holding company sector that we are looking at. Today's performance, especially if you look at JSW Holding, is doing very well, and it's almost at the upper circuit as we speak. Stale Holdings, which has holdings which has stakes as far as some of the Goenka Group companies like Fiat, etc. are concerned, again moving up almost 21%. One laggard, relative to this particular pack has been BBTC, which has stake as far as Britannia, GoAir, and other, the Wadia Group companies are concerned, has been a bit of an underperformer, up just 6% as far as this month is concerned.
Okay, all right. So all of these stocks in focus, a space which we don't talk about so often because there's no fundamental underlying, so to say, but they are doing really well today. By the way, look at Vedanta, the way the stock has moved. It is up 13% as we speak. It's a big surge in that stock price. Of course, we recently and just a while back had Mr. Anil Agrawal on the channel as well. Look at that. It is at the day's high. It has recovered 15% from the lows. So big moves coming in as far as Vedanta is concerned. Generally, metal names are doing well today, but this one definitely is taking all the eyeballs. Apart from that, we have these specialty chemical companies which are continuing their up move. We have Aether Industries, which is sitting with gains of around 7%. And overall, the market mood, which is slightly better than the global markets, but we are seeing some selling from the top again, but we'll have to see whether that sustains or not. For now, we'll take your leave on this edition of Midcap Radar. Stay tuned, your stocks when we return.